I believe it should be Bitcoin, basically, right? And it will be Bitcoin. I'm convinced of it. And I'm actually convinced that I will see it in my lifetime. Inshallah, God give us a long life. But that it's not going to be 200 years away, basically, right? Now, the first and most simple question you should ask yourself is, he said, bro, I can't believe it. This Satoshi, he checkmated the whole world with a few lines of code. That's what it is. It's a few lines of code that is public, that is out there. That's why I always say Bitcoin is as much as a social construct than it is a technological construct. If you look at the fundamental concepts that we have in Islam, and you think of them from the lens of the deflationary money and the sound monetary system, all of a sudden, you have this moment where you go like, now it all makes sense. That has fundamental repercussions of how society itself operates. Because I think that's actually the most important aspect of re-establishing sound money on the planet, and therefore changing the incentives of humans overall. Once you change incentives of humans, by definition, you get them act differently. And therefore, you change the societal environment that you operate in.
Muhammed Yesilhark, welcome to In Good Faith.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum.
Wa alaikum assalam. Well, brother, everything has led to this moment. So we're here to talk about Bitcoin, stable money, how to save the planet, human beings. Just small questions, small issues really. But for a while now, for a long time, you have been the equivalent of Jehovah's Witness for Bitcoin. Evangelizing to everybody to the point of people questioning your sanity and at some point their own sanity. So yes, we're going to talk about all of this, but maybe it will be useful for people to understand a little bit about your journey as it pertains to, sort of leading up to the first time when you became acquainted with this new phenomenon. So talk to us about that.
Of course. First of all, thank you for having me, Iqbal. It's an honor and a pleasure to be here and to be with you on this show. With regards to my story, as you know, born and raised of immigrant parents in Germany, originally Turkish background, and then basically came to London after a bit of a career in investment banking for what was better, in search for a better life in the public markets, in joining a hedge fund and always being on the equity side as a portfolio manager. And having done that for a few years, really from 2004 to 2016, you get more and more into the markets, of your understanding of financial markets, etc. And in the background, I've always had this, drive to better understand Islamic finance, basically, and how it works and how it's compatible with the current fiat system, etc., that we live in. And I always had my doubts about all of the workings of Islamic finance overall, but I didn't have an answer, so to say. I didn't know any better, and I was busy doing what I was doing in terms of my day job, so didn't really go down the rabbit hole to the point that I should have done, up until I would say 2016. In 2015-16, an ex-colleague of mine that was working with me at the first hedge fund came to see me in the office. I was European head at a firm, which was quite a big role, basically, and therefore he wanted to, I think, impress also, have someone in those echelons of finance and see what they would think of this technology. And I had a meeting with them, and they gave me the rundown on Bitcoin and Bitcoin mining and how it works, etc. That was a meeting that was supposed to be 30 minutes, and it turned out into a 4.5-hour meeting. I canceled everything I had that day. And I remember like yesterday, I was like literally blown away.
This will not be a 4.5-hour podcast.
Yeah, I hope not. So that and then really made me start going down the rabbit hole to understand this phenomenon, basically. And
so maybe let's just pause there, actually.
Yeah.
Because before you start getting to that, just so you mentioned a couple of things which I just want to maybe flesh out a bit more, right? One is that you said that you felt for some time, or you were exploring, but you also felt for some time that there was an incompatibility, or that there wasn't the solutions that were being proposed by the practitioners or the theorists even behind what's called Islamic finance, you felt that there was something fundamentally not quite right about that. So can you just say a little bit more about what your doubts were, even if you weren't sure what the solution was, but what was causing you discomfort?
Yeah, I was basically, everything that I saw there, I was always thinking it's wolf packed in sheep's clothes, basically, or sorry, the other way around, like sheep's packed in wolf's clothes, in a sense of, that the system that you're currently operating under clearly by the very core is not compatible with a system that Islam is trying to propose and be proponents of. And the solution was, let's take the goods and have the goods travel underneath the same fiat transaction, like something that is basically called it riba, let's call it profit rate, and then we pay the interest that way. And then all of a sudden it'll become like, just because you say the chocolate bar doesn't contain alcohol doesn't make the chocolate non-alcoholic, basically, if it has alcohol in it, basically, right? So I found the solutions they weren't satisfactory to me, basically, right? All of the transactions that we're proposing, having a transaction, a complete pure financial transaction, and to make that transaction Islamically compliant, you had a complete random commodity transaction that was happening at the same time somewhere else, to then say, okay, now this transaction has happened, where everybody, the counterparty and the party in getting into the transaction, know that they don't care about the commodity transaction, but they're doing it basically to make the other transaction that they actually are interested in transacting in, to make that compliant or Sharia compliant, right? So a lot of these things, it just didn't make sense to me. It just, I was like, this is never going to be competitive versus the conventional banking or the conventional financial products, because if I have to do double transactions to basically make one specific transaction compliant, then obviously I will never be able to compete on price, basically, right? And so these were just examples, right? But back then in 2016, there was some really important phenomenon that happened, which now a lot of people have forgotten about, which is that we had $18 trillion of bonds, mostly sovereign, that were trading at negative interest rates. So I want to emphasize
what does that mean?
Exactly. What does that mean? That means you are the one, whether you're an institution or an individual, and you are lending money to a government, for example, to the German government, and then normally the German government, given you're lending them money, they should pay you an interest, basically, right? In the conventional world. What they would do is, they would say, our bonds are trading at a negative rate, so for you to lend me money, you now have to pay me interest for me to keep your money. It's like, are you out of your mind? Like, I'm the one that was lucky enough to have the capital. Now I'm lending it to you, and now you want me to pay you on top for the privilege of me being able to lend you money. That's the world we went into. It sounds really crazy, but that's the world, not in 1 billion, not in 100 million. We went in trillions of dollars. I mean, the bond market back then probably was at 80, 90 trillion. And maybe a bit more, but basically around 20-25%, or let's say 15 to 25% of the bond market, I don't remember the exact numbers, were at negative territory, meaning people were paying money on top to have the privilege to lend money to someone else.
Well, why do you mention that in relation to this point we were discussing then?
Basically, it made it very clear to me that this construct of the bond market, which is the large, as large, if not larger than the equity market, just doesn't work. Like, if 20% can go being so mispriced that, the basic notion of it doesn't work, where the basic notion is time value of money, meaning money today is more worth than money tomorrow because it's inflationary, it loses value over time. So therefore, if you lend me money, then I have to pay you interest. That's the whole point of the basic principle. If that basic principle is broken, then it means the design doesn't work, right? So this was an eye-opening, and this happened at the same time with me being introduced to Bitcoin, basically, right? And that's when I really went down the rabbit hole, and I understood for the first time what money is and how it differs from credit, and how fiat money is only credit, and money, like real money itself, cannot be an IOU from anyone to anybody. it needs to be an asset that in finality you own, basically, right?
Sure.
And there is no doubt about the ownership of that, basically, right?
Okay, fine. No, that's
So
good.
that was the really the epiphany moment that I had, because of the fact that all these bonds were trading at negative yield, basically.
To what extent were you, I mean, a lot of the people who now are advocating for Bitcoin as this sort of sound money on the basis of which a new system can be built, obviously a big part of what the argument in the way that it has developed is to explain a lot more clearly the real world negative effects of a fiat monetary system. You obviously were, up until that point, and to a certain degree since then, you've been, working within that whole kind of realm. To what extent were you, regardless of what the potential solutions would be, and even before this kind of epiphany moment, let's say, to what extent were you cognizant of, like, the extent of the harms of the actual kind of ecosystem that you were functioning within?
Yeah, I mean, not necessarily, I would say, focused on the harm that they were expressing, basically, or causing as a system, but more of a lot of the illogicality, if that's a word, of the system. Every few months, depending on it's around approximately every quarter, the whole market is glued to the TV, trying to understand what 12 people in a room, called the New York Fed, basically, the Federal Reserve, will decide on what the interest rate, the monetary policy should be of the most important country on the planet, basically. How is that a system that basically makes any sense, right? If you just think about it, forget the fact, like, just think of yourself an alien that comes to the world and tries to understand how these humans live, basically. It just makes no sense, right? So, and the fun fact is, if you're an Argentinian, if you're a Brazilian, if you're a Turkish guy, if you're a South African, if you're from any of these countries, if you're a Russian, etc., meaning if you're from an emerging market country with a relatively large population, that's the same for India, for China, etc., the decision of what happens in New York is more important than the decision your own central banker or politician makes in your own country that you have voted for. That if it's a democracy, right, that you had any say in it, it kind of is irrelevant. If the Turkish central bank tomorrow decides, or the Brazilian central bank tomorrow decides to raise their local rates by 50 basis points or by 100 basis points, right, and at the same time the Federal Reserve decides to cut interest rates, basically the opposite, by 100 basis points, it's completely irrelevant what the Turkish central bank or the Brazilian central bank has decided.
And for those who are sort of maybe unfamiliar with these things, why is that the case?
Because the reserve currency is the US dollar, meaning the global currency in which every asset is priced in US dollars, and the monetary policy of the US is the most important effect on the global economy, basically, right? If they decide to ease monetary policy, it has certain effects. If they decide to tighten monetary policy, it has other effects, basically, right? And they are much more important than the local emerging markets that you live in and the monetary policy of those central banks, because they are not as potent, as we say, as the US central bank, right? So it's like you trying to swim in your pool, but there is a tsunami that comes from the sea that is very close to your pool. Guess what? It doesn't matter what you are trying to do, basically, right? Maybe that was not the best example, but it
was one of your better ones.
Yeah. So you get the gist, right?
Yeah.
So this is really more, I would say, that while being a fund manager, where you're trying to pick stocks, where you're trying to invest into the best companies that are going to be the winners in the future, where you do a lot of detailed valuation analysis with cost of capital and risk-free rates, etc., where all these things get into the equation of trying to understand where the world is going and which companies would benefit in which monetary policy environment, etc. You do all of this, and then when you actually step back, you kind of think, like, who made up these rules? Like, how does that make sense of how we are operating the world, basically, right?
And what is your distilled summary of why we are functioning in this way right now? It makes no sense. It has a lot of harms. Aliens would be flabbergasted. What's your understanding of what's led to this brought this about? I know it's a long story, but
yes.
in summary.
So I'm first of all, I'm not in the view or in the camp of saying, oh, I take a certain group of humans and I say this was their fault, and whether you would basically call that Zionism, Illuminati, or whatever people basically want to blame that on. That's not how I think. I think it's pure human nature versus the ability to do something. What I'm trying to say is, if you put the incentives to human in a certain way, humans will act in a specific manner, and that's really what has happened, basically, right? If you go back to 1913, where with the establishment of basically the fiat system, right, and then you fast forward to 1971, where Nixon decides on that Sunday to actually cut, the link between the U.S. dollar and the gold standard, right? I mean, they did that because they could. If anybody else would have had the ability to do that, if any other country would have been in the situation of the US, which, post Second World War, they were in a situation where a lot of people were dependent on them, etc. Any other country would have, in my view, taken the same step, because you gave the incentives to certain people in certain positions. They will act in what is in their best interest, basically, right? If you create a system with nepotism and oligarchy, etc., nepotism and oligarchy will emerge, right? I mean, there is no, I'm not making that dependent on, oh, these were not Muslims or these were not believers. It's exactly irrelevant, basically, right? Because we have plenty of examples of supposedly religious countries that are not acting, whether Christian, Muslim, or Jewish, in line with what their faith is actually telling them to do. And that's why I don't blame it in a specific minority or majority. I blame it on mankind not trying collectively to find a better solution, basically. And finally, now, this is why it's so exciting, right? Over the years, if you go back in history, there has been multiple phases of a fiat system. There's been multiple phases where we've been swung exactly like we've been swinging in the political spectrum from the very right to the very left. We had this in the UK now, with the Labour government versus the Conservatives and others before. And the same is happening everywhere globally, right? Now we're on a certain direction in the US. And exactly the same way, over history, mankind was swinging between a certain monetary system to another monetary system. There was a long period of time over the 5,000 years of humanity where the world was running on a gold standard. And there is extreme benefits to that. And you can see that there's multiple books on this. It's not a secret. And then there were always situations where one empire became big enough because of the gold standard. And then all of a sudden, the leader, the sultan, the emperor, whoever it was, had this idea to basically slightly play with the system into his favor again, and made a fiat system out of that. And that always led to the end of that empire, right? And so it's just because we are born, meaning us and our parents, into a system that was a fiat world, it doesn't mean that this is the only way of governance that is possible. It just means that in that small window of 50 to 100 years, we're currently in that fiat system. But there is plenty of years and examples in history where the world was not on that fiat system, and it functioned arguably much, much better than the current fiat system is functioning.
Okay, so before we now continue the story in terms of your early explorations of Bitcoin, are there any benefits of the fiat system? I mean, if you were to sort of steelman the argument, for somebody who is a proponent of the fiat system in terms of what's facilitated, etc., availability of capital, I don't know. Often what's said in linked with capitalism, obviously, is this idea that people have been lifted out of poverty.
I would have to think. It's a good question. Any benefit of the fiat system? Maybe just the availability and the divisibility of it. That the transportability of it, because fiat is transportable, right? So at the end of the day, it's digital numbers in your bank account that allow you to transact with the whole globe everywhere, right? In a gold standard, that's much more difficult, right? If you're transacting today with a Chinese a merchant and you would like to purchase something from the Chinese merchant, for you to go and pay the Chinese merchant in gold coins, he needs to make sure that they're not fake. You need to make sure that you get the goods that you want. So now who does the transfer first? And how do you make sure that it's legit? From that perspective, fiat has been a significant improvement if you're trying to look for positives, basically, right? But that's the easiest that comes to my mind, basically, the divisibility to a certain extent and the transportability of it, basically.
Sure. Okay, fine. All right then. So back to 2016, you had this 4.5-hour meeting. Do you recall the sort of the key things that jumped out at you, or the key realizations that you had at that moment in time, just in relation to Bitcoin specifically?
Basically that the monetary emission is based on mathematics and not based on will, right? Because right now, the monetary emission, meaning...
Monetary supply, meaning increasing
correct,
supply?
Increase in supply. Right now, the Federal Reserve decides, are we going into quantitative easing? Are we going into what's called quantitative tightening? What interest rates do we have? Do we print faster? Do we print slower? Right now, as you know, maybe you've seen it, in the last week, Powell was talking about, again, he's the Federal Reserve governor. He was basically talking again that maybe they're looking to stop the quantitative tightening again, because they've been doing that now for a while, that they will slow that down at least, right? So the speed of monetary emission, meaning money supply increase, is mathematic in Bitcoin. There is, and we can go through it, but it's mathematic and very clear. There is no discussion and no doubt about what the supply is. So the elasticity, so to say, of Bitcoin versus price is one. It does have no elasticity whatsoever, right? So this is something that was the first thing that stuck out to my mind, basically, right? Because bubbles and busts are exacerbated by the speed of monetary emission, basically.
Sure. Anything else from that other than this kind of fixed supply versus sort of limited supply?
It's been a very long time. I would have to think about it. I'm not sure.
Fine, then take us.
That's the most important.
Fine, then take us from there. Then what was next in the journey for you?
For me, in the journey next was basically I was like, okay, this is interesting enough that it is decentralized. That's also, by the way, was very important for me. That it's decentralized, meaning it's not controlled by anybody. It has no CEO, no marketing team, no headquarter, no management, no board of directors. It's an animal, so to say, or a being that is living in itself, so to say, right? And it grows by adoption of people understanding it and adopting it, right? So that was, for me, interesting enough for me to say, I need to go down this rabbit hole. From an investment perspective, because don't forget, I was an investor back then, really trying to always look for the next interesting investment idea. What really blew my mind is that I was like, wait a minute, this is such an interesting, it has so many interesting characteristics, but nobody owns it. Literally nobody owns this asset or even has heard of this asset. So this is something that really intrigued me, where I was like, okay, if I look into this and if I can be early in understanding this asset, if I then believe this asset is going to catch on and people will want to own it, then there's also an ability to make a lot of money, basically, right? So that was...
Congratulations.
No, that was another decisive factor for me,
Sure.
to go down that rabbit hole. Back in 2016, the data that was out there, the literature that was out there, etc., was way less than today,
course, yeah.
right? So we were going through, podcasts didn't exist, right? So to start with, right? So I was basically watching YouTube videos of some 15-year-old kids or 18-year-old kids that were, so to say, punting in Bitcoin, and them trying to explain what it is and why they buy it or why they mine it, etc. So I was literally, whatever PDF document I could find, whichever YouTube video I could find, I was trying to go through in the internet to understand what this really is about. And I was obviously still very skeptical. I was like, okay, could there be a backdoor in this? Could there be someone that will then say, ha, ha, he, I hadn't told you, look, I'm the one profiting from this now, all of a sudden.
But at that point, you were still looking at it from an investment standpoint as opposed to a kind of fiat replacement.
Correct. Correct.
So when did that, what was a turning point when you kind of crossed that sort of bridge, let's say, where you thought, okay, no, actually, this can become the basis of how everything functions?
Yeah, so I think that was around 2017, to 2018. I don't know if you remember, but there was a significant rally in what we now call the ICO craze in 16 and 17, basically, where all of a sudden all these other coins emerged. And when all of these other coins really emerged in the cryptocurrency ecosystem, I basically, as someone that had that was mining Bitcoin and that had invested in Bitcoin, I was basically trying to understand, okay, how is this defendable and how does this differ versus the rest, basically, right? And that's where you then start thinking more deeply about this asset that you are invested in. And that's when I really got much more interested into the monetary aspects of this. I classify, Iqbal, blockchain technology and Bitcoin specifically, I classify it as two real drivers. One is meaning revolutions. One is the technological revolution of blockchain, which it eliminates middlemen. It eliminates rent seekers, if that's a term that we can explain, right?
Yeah, do you want to explain that?
Yeah, so rent seekers are people that in a process would be in the middle that would want to get a cut from a specific transaction.
Middleman.
Uber is your rent.
Mr. 10%.
Correct, right? So Uber is your rent seeker in you trying to get a cab, basically, right? So they provide your service and the cab comes to you very quickly and therefore you pay a cut to Uber, basically, right? That's an example of a rent seeker. The blockchain technology eliminates rent seekers and eliminates middlemen. And increases efficiency, right? That's the technological revolution of blockchain, right? But from another aspect, Bitcoin specifically is actually a monetary revolution, because if you fast forward and you let this really go through the fiat system and get adopted slowly and surely, then all of a sudden you have a monetary system, because you move from an inflationary currency that loses value, that needs to, somebody needs to compensate you for receiving your cash at a later stage. So basically it's inflationary, it loses value, to a deflationary currency that actually increases value because it's limited. Its monetary supply is set by mathematics, basically. And therefore, very similar to gold, if you think of it, it actually increases in value. And that has fundamental repercussions of how society itself operates, which I think we should be spending time on this podcast, because I think that's actually the most important aspect of reestablishing sound money on the planet, and therefore changing the incentives of humans overall. And as I said in the beginning, once you change incentives of humans, by definition, you get them act differently, and therefore you change the societal environment that you operate in, basically, right? So, and that's why a lot of Bitcoiners, when you go onto X or formerly Twitter, you'll see a lot of guys that, whatever news there is that someone shares, they will say underneath, Bitcoin fixes this, right? Someone will say, a lady got, God forbid, raped in India, basically. And somebody will write underneath, Bitcoin fixes this, which if you don't know what the guy's talking about, you will think like, what kind of capitalist or idiot is this that basically just takes everything that happens in society and turns it back into some sort of something to do with money. But what that person actually means is that if you change the behavior by changing, you need to change money to change the incentives, and then humans will have different behavior, basically. And we should go into this. It's something to do with the Austrian School of Economics of basically what value is and what time preference is and what high time preference versus low time preference is. And this is really, I think, the most important aspect. And then that was the most important, what really got me excited, basically.
All right, well, let's get into it. No need to postpone or delay. So, you said a lot of things. Austrian School of Economics, time preference, incentives. So where do you want to start?
Let's start simple. So generally, in the broader sense and the biggest picture, there is two ways, basically, that you can operate an economy, right? One is the Keynesian fiat system with inflationary money, where your focus is aggregate demand, and central banks and others are basically involved in setting monetary policy and deciding how much money supply there is, etc. Or there is the Austrian School of Economics, which is based on deflationary money, on sound money, on limited money, on scarcity, where basically there is no central bank, there is no central authority that decides on aggregate demand and says, oh, we are in a monetary slump, so we should print money or support people, etc. You just let things play out as they should be playing out. But your money doesn't lose value over time. It actually increases value over time. And those are the general two systems that you can choose from as humans, basically, right? You can have a country operate on the fiat system, or the world operate on the fiat system. And then you have dollars or euros or rupees or Turkish liras or Brazilian pesos or whatever it is. Or you can have it operate on the sound monetary system. And then in the past, it's always been gold and silver, right, as the precious metals. And then after that, now I believe it should be Bitcoin, basically, right? And it will be Bitcoin. I'm convinced of it. And I'm actually convinced that I will see it in my lifetime. Inshallah, God give us long life. But that it's not going to be 200 years away, basically, right? Now, the first and most simple question you should ask yourself is, why is it, especially people from emerging markets background, and the largest buyers are, funnily, it's China, India, and Turkey is number 4 globally of gold buyers, right? Why is it when you ask people on the road and you would stop them and they would say, what's money? Maybe 50%, 70% would tell you dollars, euros, pounds, but maybe at least 10, 20, 30% would say gold, basically. Why is it that some shiny metal has become money, or the equivalent of money in so many people's minds? Especially when you go to our parents or others, they would immediately just refer that to gold. There is a reason for it. Because if you look at the way money emerges, people gravitate to the hardest form of money, and that itself becomes money, because money is a medium exchange and a savings tool, right? It is a store of value, right? If you think of those things, medium exchange means you want bananas, I want apple, now we need to exchange. At some point, bananas are more valuable than apple. At some point, apples are more valuable than banana. So the easiest thing is for you to say it's £1, for me to say it's £1.50, and for us to just exchange it via the unit of account, basically, right? But that unit of account, at the same time, needs to be a store of value. If you had your pounds in your pocket and today it would buy you half a glass of water and tomorrow it would buy you the whole studio, it would make no sense. We were like, whoa, what is it now? Can I buy a car with it? Or can I buy a banana with it, basically, right? So it needs to have some sort of store of value. It needs to be a store of value at the same time, right? So those are the there's more characteristics to it, but that's why gold and precious metals have become money. In simple terms, we say it travels perfectly over over time. It travels really well over time. Now, what does that mean is any other metal or any other good basically is perishable. There is something that's called the law of entropy, meaning that over time things perish. We get older, the banana gets goes bad, right? Anything else, if I would leave, if you would decide together, from now on we're just going to use oatmeal for money, we're going to be transacting in oatmeal, right? If we leave it here on the table for a month, probably none of us would be able to touch that oatmeal anymore, because it would have gone basically completely in line with law of entropy. So what happens is, over the 5,000 whatever years of history of humans, basically people have gravitated to something that travels extremely well over time and holds its store of value, which again comes to the concept of stock to flow. It's scarce, but the inflation rate of that good is so low, the flow is so low versus the stock value, that it can be money. So gold holds its value because it's scarce and you can't find easily more of it, basically. And at the same time, it travels perfectly well over time. You can put it in your garden, you can put it in your cupboard, you can leave it in the bank, you can take a gold bar or a gold chain and you can do whatever you want with it. You can even swallow it. It doesn't make a difference. It will not lose its characteristics, basically, right? It'll be the same characteristics, which means it's the best good to be anti-entropy or anti-fragile, whatever you want to call it. And therefore, people are not worried about it. It has become money. That's the reason. And that's the reason why silver or others were always only money for the smaller transactions, because it was easier divisible and easier carryable than gold, basically, right? If gold would have been infinitely divisible and would have been so easy to go and say, because if I would say to you, okay, give me a banana and pay me in gold, you would have to pay me in some little flakes, basically, right? And you probably would have overpaid me because, it's not easy to divide it to an extent that you can transact with it on small goods, basically. That's why humans then used silver, because it has very similar characteristics to gold, but its stock to flow is worse, is way worse. There is much more supply coming up than there is actually stock out there. So therefore, the overall value is much lower, right? So silver right now is around $2.5 trillion, and gold yesterday just crossed $30 trillion. So gold globally is, a multiple more valuable than gold is, basically,
Than silver.
Right? Than silver is around 12 times more valuable, so to say, right?
But it was to solve this divisibility problem that paper money came into it in the first place, no?
Correct. You can argue that was the...
Which is what you said earlier was
yeah,
the
so
kind of benefit.
paper money came in to solve that. And then the people they were in the right positions, they thought, hey, wait a minute, if we're solving this problem, can we also add a little bit of a characteristics that favors us more than others? And that's how fiat was emerged, so to say, right? And if I were in that position, or you were in that position, we would have probably done something very similar, basically, right? That's why I'm saying that whole notion of saying, oh, they were evil or they were doing something, that's not how you have to see it, basically, right? It's just you give people the opportunity. If you tell people this is the monetary system, that's how it's set, this is how we're going to operate, then if you can't game the system, nobody will game the system. If you allow people to game the system, they will try to game the system, right?
What's the problem with if it was possible, what was the problem with going back to a gold standard where the actual redeemability, let's say, of the gold, actually, it was linked to the paper money. So you have the best of both worlds. And would that still work in your, because it seems like that would still have all the characteristics that you're saying are necessary.
So it would definitely be better in my mind than what we have currently. The problem that you have right now with this, basically, with going back, is that the world versus 500 years ago, 200 years ago, 5,000 years ago has completely changed to an extent that every city has become a village and the world has become a village. Meaning you're now in a situation where this podcast can be watched, can be consumed, can be interacted with anybody on the globe anywhere. And whoever would want to benefit from it or would want to have a commercial transaction with another person on the other part of the corner of the world would need a currency, would need a monetary good, basically, that not only travels well over time, which gold does, as I explained, extremely well, but you need to be able to travel over space. And gold, unfortunately, travels extremely badly over space. Now, it was perfectly fine at the time of Prophet Muhammad ﷺ, for example. Why? Because the biggest transfer or the biggest interaction was by going from Mecca to Baghdad or going to Damascus, which was still a 2-week or a 1 week or a 3-week journey. But that was the maximum where people would take their gold with them, do a large transactions, fill the camels with the spices or whatever goods they would receive, and then come back to wherever they were living, basically, right? You're not living in that world anymore. The 21st century requires you a monetary, for money to be traveling over space, but also traveling over time. We need both characteristics. And because we need it, Allah has created it, basically.
Through
an anonymous person that called himself Satoshi Nakamoto. And I always say, if he would have been called Abdul Hakim Ahmed, nobody would have adopted the currency. So it had to be called something everybody considers as being neutral and human friendly, which is a very, let's say,
Japanese Zen
name, basically.
Yeah,
yes,
absolutely. He's sitting cross-legged in a cave somewhere right now. Yeah. Okay, so fine. All right then. So anything else you want to say about the what makes Bitcoin as a basis or a standard for a new system necessary? You mentioned earlier about time preference.
Yes.
Do you want to just explain that a little bit then?
Before we go into the time preference part, because that's more of the effects of sound money, like once it's adopted.
Okay.
In terms of the characteristics that we need to finalize, is for something to be money, it needs to be durable, like we discussed, right? Against the law of entropy. It needs to be divisible. It needs to be transportable, right? It needs to be scarce. It needs to be non-confiscatable, right? Because it shouldn't be that somebody can say, oh, we've blocked your bank account. Now your money is gone because we thought that you are sanctioned, which is exactly what happened in 2022 with all of the euros and the dollars the Russian central bank had. 180 billion approximately, if I remember correctly. All of a sudden they said, those dollars and euros with those serial numbers, you can't use anymore because you've been a bad boy. You've been a bad boy, right? We decided that you've been a bad boy. Now, I'm not saying he's been a good boy because obviously he's invaded another country, right? But what I'm saying is the fact that you have said that the world has realized that at will of someone, whether right or wrong, you can eliminate certain dollars or euros in the system, opens up a huge question mark to say, me India, me Turkey, me Brazil, will I always be a good boy? Or will something that I decide to do for my own people, for my own nation, will ever be seen as a bad boy, and therefore I could be cancelled as well, basically, right? That's the question mark, right? So it needs to be unconfiscable. It needs to be immutable, can't be changed, can't be gold and then paper tomorrow or bananas the day after. It needs to be immutable, basically. And what we call censorship resistant as well, right? So nobody can't be censoring it, so to say. And if you have the ability, which is the beauty now of digital gold, of Bitcoin, to have absolute scarcity, because we never had absolute scarcity. We only know that there is not enough gold, meaning that gold is scarce and it doesn't come about easily. The inflation rate, according to the World Gold Council, is around 1.8, 1.9%. But we don't know. It could be 2.5%. It could be 3% because someone, finds some gold and mines it in Tanzania and basically, or in the Dominican Republic or in Philippines. It doesn't matter, basically, right? And inflation could be more. We don't know what the exact rate is because we have to just collect data that are voluntarily shared in some sort of association, basically, right? Or in some sort of council. But the only thing we know is that it is rare enough for it to be scarce, right? It's not readily available everywhere. And new gold, I'm talking about, right?
Sure.
So that makes it still interesting. But now we have the ability to have absolute scarcity because Bitcoin is limited at 21 million Bitcoin.
I did manage to look into it in detail, but I did read something recently where that just slight, you may have heard, but you'll know better than me, but that there was some challenge to this notion of scarcity, that I think amongst the kind of the top miners or something, there was some discussion about the possibility of increasing the supply or something like this. Have you heard anything in relation to that?
There is none of that. There is only this complete misunderstanding with some people, because Bitcoin is divisible up until 8 commas after the zero, right?
Okay.
So we say one Bitcoin can be divided into 100 million bits, but the ecosystem has now renamed that to sats, to satoshis. So that's why you will hear everywhere, stack your sats, meaning because one Bitcoin is now 120 or whatever, now $100,000. $100,000 not everybody can find immediately to buy one Bitcoin. So you can buy, up to 8 digits after the comma of a Bitcoin.
Sure.
So you can just buy one satoshi. Meaning,
that's just dividing
100 millionth of a Bitcoin, right?
Sure.
The divisibility of Bitcoin, which is very important, by the way,
of course,
for smaller transactions,
as
right?
we've been discussing.
As we've been discussing, right? So some people that don't get this understanding, they say, no, there are not 21 million Bitcoins. There are 21 million times 100 million bits, and therefore it's not as scarce as you. That's like saying, I take a pizza. And then just because I divided it into 16 slices, doesn't mean there is more pizza. There's just one pizza. Whether you have, 16 slices or 8 slices, it doesn't change the fact that there is one pizza. So it's just a human. Some people have been arguing this, by the way, including in the Financial Times, like which you would think of as a reputable.
Once upon a time.
Exactly. News source had argued that this was proof that Bitcoin wasn't scarce.
Yeah, but that's obviously...
Which is completely...
obviously nonsensical.
Yeah,
but however, a layperson could still ask, well, okay, whoever created it, even though we're saying it's decentralized right now, whoever created it, and obviously Satoshi could be a group of people, it could be, a powerful whoever that has, whatever plans for the world. God bless him and them. But could say, well, if they created 21 million, there's nothing to stop them extending that to a further 21 million.
Okay.
What prevents that?
Yeah, so it prevents it because like a very good friend of mine recently said to me, once he had this epiphany moment of having gone through the rabbit hole of Bitcoin, He said, bro, I can't believe it. This Satoshi, he checkmated the whole world with a few lines of code. That's what it is. It's a few lines of code that is public, that is out there. That's why I always say Bitcoin is as much as a social construct than it is a technological construct, basically. He just proposed a system and said, hey, I have this thing. It could be valuable. And he wrote the white paper on 31st of October 2008 at the depth of the financial crisis. And he published it on Bitcoin Talk, basically. It was an 8-pager. Right? And it was called a peer-to-peer cashless system, basically, right? A peer-to-peer system for, like, he was just proposing a system where people could send money to each other, cash to each other, without a third party, without any other individual. He just solved what we call the double spend problem, basically, right? If I have a picture of us together in the studio and I send it to you after this podcast and I say, brother Iqbal, I love you so much. I've sent you the only picture of the two of us in the studio that I have taken the selfie. You'd be just smiling at it like you're smiling at me now, because you'll be like, Muhammad, I have no guarantee whatsoever that you will not send this picture to someone else at the same time or after or a month later or a year later, or even send it to me again after some time. That's called this double spend problem. Satoshi solved that by having the blockchain. If we do a transaction, that transaction is recorded everywhere. It's done. It's dusted.
But why does that guarantee limited supply?
That's not necessarily guaranteeing limited supply.
Yeah.
What I'm trying to say is that the code itself is public. The emission of the monetary supply is public. The rules are all governed by mathematics, and there is nothing that can change that. There is nobody that can press a button. There is no software that someone can press a button and say, look, I didn't tell you, now we have 42 million Bitcoin instead of 21. What could happen is, for whatever reason, is the whole community in Bitcoin, like it has done over those 16 years, it's now become a teenager, I say, right? Over those 16 years, there were multiple upgrades to the Bitcoin protocol. And it could be that, again, the system, the Bitcoiners, so to say, the ecosystem gets together and decides to say, hey, we need to make it quantum proof. Let's add this to the Bitcoin protocol to make it more secure. Let's add this to make it more divisible. Let's add this in terms of, they can do that. And people have been doing that over the 16 years, basically. Now, it's very slow. It's very difficult because you got to get a lot of people. It's true democracy.
How does that work? Like, is there a particular percentage of people that need to?
There is basically core Bitcoiners, core Bitcoin developers. They're funded by a lot of the companies that are in the ecosystem that are making money. And then those developers, they basically are computer programmers that are spending their time to come up with suggestions to improve the Bitcoin protocol, to make it more secure, to make it faster, to make it better, in all shapes or form suggestions, basically. And then those suggestions need to get taken up by the node operators, which are the ones that are operating the blockchains, right? You can do that as well. There's very simple hardware that you can buy, and then you run the blockchain on your own hardware, right? Or by miners that are the ones that are solving the algorithmic puzzles that then creates the new Bitcoin. If it gets adopted, then the Bitcoin, the protocol upgrade happens. If it doesn't get adopted, it doesn't happen. There's been plenty of examples of, SegWit was an update, for example, that came to the Bitcoin protocol. First, it was slow to adopt. Then it got adopted. Now, probably, I'd say 90+% of transactions are SegWit compliant, so to say, right? So this is just exactly like I said. It's like pure, true, so to say, democracy, in a sense of everybody can do whatever they want to do. There've been plenty of people that tried to fork the Bitcoin blockchain. They came up with Bitcoin Cash and Bitcoin Dynamic and Bitcoin Dynamite and Bitcoin Diamond and you name it, basically, right? So you can, it's open to in Turkish we say hodri meydan. It means like it's open. Everybody can propose whatever they want to propose. The question is who's going to be successful, basically.
Sure.
Right?
Okay, so
who will have adoption. Basically.
Yeah. So I want to move on, if it's okay, if you think we can, to the real world effects then, or the benefits now of this kind of sound money, and then let's talk about that in terms of like from I suppose a theoretical perspective, and then we'll talk about what does a transition look like from here to there. So that we'll maybe finish with that. So You started to touch on it, time preference, the deflationary effects, all this kind of
Yes.
stuff. But can you, again, just in simple terms, start to delineate what these benefits are for the world? And also, because you made that reference earlier about, Bitcoin fixes this for
Yes.
seemingly unconnected matters. Maybe you can also try to close that gap.
So when you compare inflationary money with deflationary money, there is significant differences that happen in human behavior, in human action, based on the monetary system that the human operates in, right? So I'll give you very simple examples. And I think a lot of people that are listening to this podcast that are not from the developed world, but from the emerging markets will have very easy ability to adopt and understand what I'm talking about, right? If your money loses value currently, your pounds lose value by whatever the inflation rate is of the country. Let's call it 5%. So basically your pounds lose around 5% a year, right? So it's worth £1 today. In a year's time, it's worth 95 pence, and it keeps on going like that down to zero, literally, right? Which is why you say, oh, pre-COVID, the coffee was £2, now it's £4. Guess what? It's lost 50% of its value because there was some money printing that has happened in between, basically, right?
Just a little bit.
Just a little bit, right? So that creates a certain behavior. Imagine you'd get your salary at the end of the month and money would lose 30% of its value every month, basically, right? Which means in 3 months, your money would be toilet paper. In that case, what you would do is you'd run out on the same day of you getting your salary and you would exchange your money into something that does not lose value that quickly. That could be a phone, could be a car, depending on how much you get. There would be even an iron. Whatever you can find your hand on, basically, you would do that. And people doing that in emerging markets, right? Back in just only less than a year ago, less than 2 years ago in Turkey, the inflation rate almost hit 100%, right? And I'm Turkish and I know the market. People would take their salaries, run immediately to the equivalent of a whatever, you tell me a store where they sell electronic goods, basically, right? They would go into one of those electronic goods stores and they'd buy a phone, they would buy a TV, they would buy a printer, they would buy anything that they know they can sell relatively quickly, just not to lose money. They just go to bazaar and buy gold, basically, right that day. Or they would just leave it in their bank account, immediately send it to their crypto account, and they would buy USDT with it, meaning stable coins, tether, kind of thing. So something, at least what they would consider in that country, a hard currency, meaning something that still loses value, but lower and slower than your 30%, right? So this certain behavior, that monetary system creates a certain behavior. That inflationary money causes you to have high time preference, meaning it causes you to want things faster, quicker, immediately, and without delay, basically, right? So that's where the dopamine hit economy comes from.
Or consumerism, essentially.
Consumerism comes from, basically, right? That's where everything that you would, for any religious, basically, script would not ask you not to be that way. That's what it causes, basically, right? It doesn't matter whether you're talking about Islam, Judaism, Christianity, or even any other, even probably Scientology. I haven't looked into it, but something else. They would always say, look, be humble, take the middle way, don't go crazy on stuff, don't go overboard.
Yeah, more detached, basically.
Always be more detached, always be more low time preference, always think of the long term, etc. Right? So that's the most important difference between the high time preference and the low time preference. Now, if your money, on the other hand, is deflationary, and it goes up in value, and it goes up in value either 5% a year or 50% a year, right? Depending on where you are in the S-curve of adoption of that deflationary money, basically, then your behavior changes very, very quickly. All of a sudden, you're not interested in exchanging your money into anything whatsoever. You just want to hold on to it. And if you think like, oh, my t-shirt, my jumper now has a hole, obviously that's not very ideal. If I go on TV or on a podcast, I should fix that. Then you have two options. Either you go buy a new jumper, and that's £50 or £100, depending on which jumper you buy. Or you say, wait a minute, I know my mom knew that tailor. Let me go into that tailor and see if he can fix it from the inside. Then it doesn't look like it had a hole. and it's got the same thing, and I've spent £5 or maybe £10, whatever the price is, right? Don't get stuck on the example. Sure. But my point is, deflationary money makes you automatically low time preference and think of the future, invest into the future, because you only need to earn your money once. This is the most important. You only need to earn your money once, and then it protects you for your lifetime of that effort that has gone into making that money. Whereas in the fiat system, you first have the whole of your effort to earn the money, and then once you've earned it, you need a whole level of expertise to make sure that you don't lose it again, because you're at the mercy of all these attacks that are happening on your money, given it's inflationary, that it actually loses purchasing power. And then all of a sudden, if you do big mistakes, for example, if you had earned 10 million Turkish lira, 5 years, 10 years ago, in 2014, and now you had sold your assets and you now had it in the bank account, and then you took it out of the bank and you thought, like, I don't trust the banks, I'm just going to keep it in my cupboard. And you woke up 10 years later, it literally went down by 99% of purchasing power, right? So you've just destroyed, burned, over a decade, so much capital that, your children or your children's children would be like, what was my grandpa thinking, to do something like that, right? So that's really the biggest differential, that fiat in Turkish, again, we say paran mı var, derdin mi var. It means you have money, you have problems. It's a bit similar to more money, more problems, basically, right? More money, more problems, whatever they say that. What that means is, because you need to make a real effort to make sure that you then don't lose that money that you have earned once. In the Austrian school, in the sound monetary system, you're not worried about that. That changes the incentive. Now you become a philosopher, because you've earned your money, you had your effort. Now, because you're protected, you don't need to worry about it anymore. Now you can think of real long-term stuff, basically. That's why on Piccadilly Circus and on Oxford Circus, etc., you have all these beautiful buildings that you can see that have taken years and years to build and to put all the figures on top of the buildings. That's why you had cathedrals that were built. It would take 200 years to build a cathedral, because the people that were building the cathedral knew it wasn't meant for them, it wasn't meant for their children, it was meant for the hundreds of years of humans that will come after that. And because their religion told them to be low time preference, and the monetary system allowed them to be low time preference, they could spend that money and time and energy on those beautiful mosques, whether you call it the Hagia Sophia or the Blue Mosque, and to give Turkish examples, or you go to anywhere else on the world, right? I mean, the Taj Mahal in India, etc., right? So all of those things that you say, whereas now art and things is a banana on the wall with a tape on it, basically, right? Mm-hmm. Or it's just a black stroke, basically, of one thing, and they call it contemporary art, basically, right? These are all outcomes of the fiat world, whether it's the fast food that we have, right? I mean, I really, really encourage your listeners to read all 3 books of Saifuddin Ammous, and I have no benefit from that. I just benefited from the books, and that's why I'm mentioning them here. But in my mind, he's probably the most important author of of the last few decades, because he's basically making it crystal clear of what principles of economics should be. He has a book called Principles of Economics. He has a book called The Bitcoin Standard, and a book called The Fiat Standard. And really, he just lays it out in layman terms of how you need to think about money, of what is money, and what's the difference between deflationary money, inflationary money, and how that changes human behavior and society. If you have deflationary money, by definition, you don't have junk food, because no one will be interested in junk food. There is no buyer of that food, basically. The reason why we have junk food today is because we have inflationary money. That's why I'm linking it back now. Sorry for the long elaboration, but I'm linking it back to that Indian rape case that I gave in the beginning, where I'm basically saying somebody will write underneath and say Bitcoin fixes this. What they mean is that human behavior of that dopamine hit that makes him do something wrong, that requirement of, oh, I need to get this now, and why do I not have it and someone else has it, etc., which then makes him go into taking drugs, doing an act of violence, etc., doesn't exist, or is way more reduced, at least, if the monetary system is a deflationary system, basically. Okay, so counter arguments, let's just deal with some. One is that it sounds as though you were sort of articulating
the benefit of essentially what could then be described as hoarding behavior, right? So some of the critics may say, well, okay, fine, but actually you're discouraging then spending, investment, GDP will, collapse, etc. And essentially people will, once they've made their money, okay, now they can go be a philosopher. That's wonderful in one sense, but they've ceased to be a useful economic agent, and we've encouraged, possibly encouraging selfish behavior as well. They can just hoard and do whatever.
Yeah, obviously, it's a on paper it looks like a good pushback, but obviously, thankfully, in the Austrian school we have a very solid answer to that.
So the way you should say is, on paper it looks like good pushback, but on Bitcoin it doesn't.
It doesn't. So exactly, that's good. Actually, no pun intended, so to say. But the answer to that is very simple, Iqbal. Because we're at the early phase still of adopting Bitcoin, the growth rate of the number go up technology, so to say, the deflationary aspect of it, is still significantly above any other asset out there. Bitcoin has been compounding at approximately 60% annually, and people expect it to compound still for the next decade at around 30% annually. There is no other asset that goes up at that speed still known to mankind. Nasdaq tries every time to get close and then has some sort of 50% drawdown as well. But compounding at that rate, so to say, right now, given the adoption curve of Bitcoin, doesn't exist. So from that perspective, it's completely normal for people to be in this hoarding mode. There's nothing wrong with that, by the way, whether it's from a religious aspect or from an economic aspect, right? Because what will happen is, once you're at the end state and the world is operating on the gold standard, meaning the Bitcoin standard, the digital gold standard, that is able to go over space and time, right? Which is what we need. Once we're there, the deflationary aspect and the value increase of it will only be the equivalent of productivity. It'll only be going up by 3-4% at max a year, which, by the way, is the compounding rate of gold. Gold, on average, if you now take it over 50 years, is compounding at around 3.5-4%. It's basically just protecting your purchasing power, right? It still buys you 1 bar of gold, still buys you whatever it is, half a Ferrari that it had bought you 10, 20 years ago, so to say, right? It's just protecting that purchasing power, right? That's why now, because we had this move, people always now say, no, you have to measure everything in gold, because that's the true measure of money, so to say. And it is, because it has a much longer track record than Bitcoin is. But I'm saying, for the new world, Bitcoin can replace gold because it's a harder form of money. And we know from history that humans go to the hardness. Whatever is the hardest form becomes money. That's why gold has become money,
sure.
Right? So now, if you think of it the same way, if now we've adopted the Bitcoin standard, we're fast forwarding 50 years, everybody's on the Bitcoin standard, we're running the global, all the central banks are gone, and now we're running the global economy on a decentralized monetary base, that is the Bitcoin. That's now become, the underlying fundamental monetary operating system of the globe. Fair, decentralized, not controlled by anyone, and has a known supply and is fixed into the ultimate supply, basically. Fine. If we're there, it's going to go up 3% in value. Whatever the innovation is of the productivity increases of human mankind on average of the globe. Obviously, none of us will say, hey, let's keep our Bitcoin. Let's just hoard it. You will not. You will say, wait a minute, can I open up a coffee shop and try to make 10% a year? Can I start a podcasting and can I do whatever
and make nothing
right? Can I do whatever it is that you're interested in, that you have expertise in, that you can offer to the world, that you think you can do more than 3%? That's exactly why you have the whole of the economies out there right now. So that argument of hoarding is completely misplaced.
Fine.
Because it won't happen, basically.
Okay.
I want to bring this completely separately into something that was a real big hit for me in my understanding, and I hope people will benefit from this. From an Islamic concept, from an Islamic perspective, it's very clear of what Islam recommends and asks us to do when two people basically request or require funds from each other, right? If I go to you and say, Iqbal, I had a bit of a low downer, I had a bit of an issue financially because I lost my job or something happened to me, or I got someone ill, etc. Can you loan me 10,000 pounds, basically, right? Islam tells you that, and you know these things much better than me, that if you have the ability and if you have the means, that you should loan that money to me, basically, right? Now, Why would Islam tell you to do that? There is a significant portion of the Quran that talks about adl, about adala, right? About justice, right? Why would Islam put you in a worse position just because you have earned hard or inherited or whatever your situation and your test is basically, and you have those funds? Why would it ask you to basically lend those to me as the person that has requested them from you? Only and only if it's not doing any injustice to you. In the fiat system, if you give me 10,000 pounds and we're both Muslim and I give it to you even one day later, you've lost. If I give it to you in a year later, you've lost 5% or maybe 10%. If we do the same in any other currency, like right now you're getting into this, right? At some point, if it's 3 years and we're talking Turkish lira, you'll be like, hey, Muhammad, I'm, like I like you and everything, but I think I've really gotten the shorter stick here, basically, right? So why would Islam tell you to do that? And on top of that, why would Islam tell you that if I then go to you 6 months later, which we had written down and agreed, and I come to you and I say, Iqbal, my situation hasn't changed, I need a bit more time. Islam is telling you to be lenient on me, to give me more time, to give me the ability to pay you back, basically.
You're saying because it assumes the soundness of money.
Of course, it's only doing that because in the Islamic context, fiat system does not exist. Islam is telling you that because it knows that the only loss, that you have no loss from a purchasing power perspective, you're not any worse by lending that money to me, except for the opportunity cost of having started a coffee shop or whatever your business is, or a law firm or a consultancy or whatever it is, but it would have required you to take new risk. And from a no risk perspective, you've not basically gotten any worse. Your money still, when you receive it, you will still receive 1 Bitcoin back, whatever the equivalent is, basically, right? That's why Islam is telling you to give a helping hand to your brother, to your sister, to your fellow citizen, because you're not being disadvantaged by doing that, basically.
Sure.
In fact, you've done good. And it's the same argument of why zakat, basically, for example, for housing, is different than for cash, right? You have the option to sit on your Bitcoin and pay 2.5% a year. But you can also create housing, and now you pay zakat on the rental income of it instead of the value of it, as long as you don't decide to sell it. Why is Islam doing that? Because it's a good thing to create housing, basically, right? It's encouraging you to do a certain act, basically. The system is built that way. But that's why I'm again linking it back to our initial conversation. Those are, if you look at the fundamental concepts that we have in Islam, and you think of them from the lens of the deflationary money and the sound monetary system, all of a sudden you have this moment where you go like, now it all makes sense, basically, right? And that's what I encourage people to do when they go through these notions, to actually think of them not from the current system, but from a deflationary monetary system, from a sound monetary system.
Yeah, sure.
And then, a lot of them will make so much more sense.
Yeah, it's more coherent, yeah.
Yeah, exactly.
In terms of some of the stuff you were speaking about, again, just to another sort of pushback might be, maybe it's possible that you and others are overemphasizing the benefits of low time preference versus high time preference from the kind of incentive and then maybe behavioral perspective, given the fact that, as you've acknowledged, most of human history has been based on sort of sound money, and there's been no shortage of, selfish behavior, moral degradation, injustices, inequality even. So, is it really going to make that much of a difference? Meaning, people are still people. So even in this system, the things that people will do to do each other over, and specifically, actually, I want to link it to the idea of conflict as well, because it's often said that one of the major results of the fiat system, through a number of
unnecessary wars.
Yeah, wars and conflicts. But then historically, again, no shortage of.
Yeah, we can talk about that, and I encourage people to, as I said, to read books. But there's multiple other books as well that you can go through it, and it's very clear. Let's just go it by simple examples, right? Sure. If you watch a movie that talks about the medieval times, basically, or the Ottoman Empire, like Ertuğrul, Diriliş Ertuğrul, or something that's become very famous that people have watched, you will see that battles on cities were always on battlegrounds. They were always outside the city, and there were always the two armies, whoever number they had, clashing. And whenever one of the leaders realized that their army was clearly in the loss, the battle would be over. Why is that? Why didn't these clashes happen in the city, destroying everything they had against each other? The reason why that has happened is because money was decentralized and not controlled by the countries, and they couldn't print it. So the leaders that were in the relative cities and countries, they were very, very cognizant about the fact that they have a certain budget only to see if they can sustain that situation, and if they can't, then they're going to be bankrupt, basically. So nobody had any interest whatsoever to just print money and to go for war, basically. Whereas in a fiat system, you just print more money, meaning you steal from the future generations of that country, right? Because via inflation, you just steal purchasing power from the future generations of that money. You disadvantage savers that have been saving in your currency, and you take their money and you spend it on whatever cause you think is the right thing to do. If you think that's invading another country, you'll do that, basically, right? If you have decentralized sound money, it's the exact opposite. You're like, you don't want to have any conflict with anyone, and you don't want to get into anyone's business, because if that goes wrong, you have a real problem, basically, right? So if you look at the history and the number of wars and the number of conflicts that have happened and the number of crimes that have happened, right, then you will see that that it's at certain periods there was way less happening than in other periods. I'll give you a very simple example of something that people will be able to relate to or will have heard of. But basically, in Islam, you have this clear notion of, if something happens and someone steals, his hand should be chopped off, basically, right? Now you look at the Ottoman Empire, that was the last Khalifa, in Khilafah, basically, right? So basically for almost 600 years, ruling almost half of the world, right? It went from Vienna all the way to China, right? So it did rule, a very large portion of back then mankind, so to say, right? And if you look at that, there is a certain period of almost 400 years where in total over that multiple 100-year period, they had 4 arms cut off. Now, first of all, the burden to prove that is extremely high in Islam. As you know, the 4 people have to see the act at the same time. There is, the burden of proof for it to be actually calling it a steal is extremely high. But at the same time, you can build a society where even stealing, basically to that level, had only happened a handful of times over a 400-year period. Whereas in the fiat world today, I just came back from Los Angeles, you can't even go into a CVS. Everything is locked up. A CVS is the equivalent of Boots in the US, right? You can't even go into a CVS. Everything is locked up. Every cream, every toothpaste, every water, every Red Bull is locked up, basically, because people just walk in, take whatever they want, and they walk out, basically, right? And nobody can stop them, basically, right? And so that's really, I encourage people to go back into history. And my claim is, on the periods where the countries or the empires, etc., were operating on a pure gold standard, wars, crimes, bad behavior, people doing each other over, like you said, was at a way lower level than in situations where you would do the same comparison of where countries were run on the fiat monetary system.
Okay. All right.
So humans are still humans, like you said, but incentives can change behavior very, very rapidly and significantly.
Before we talk about the transition, which we should come on to now, are there anything else that you want to say in terms of the benefits or the relative benefits of a Bitcoin-based world?
Relative benefits versus fiat, you mean?
Yeah, versus where we are right now.
Yeah, I think the time preference part is one of the most important. Changing the incentives of people. If I can think of anything else,
but actually, no, so I've thought of something actually which I did want to pick up with you, which was this issue about because one of the ways that people are used to the idea of this notion of separating church from state, and I think the way you put it for this is, well, we need to separate money from state. So I'm very interested to understand first of all what you mean by that, and secondly, what are the implications of this for the nation state?
Yeah, so it's a very good point that you mentioned it, and obviously the notion of the idea of we need to separate church from state comes from the period of the Inquisition, etc., where the church was expressing a significant influence over its people, basically, because it had control of the state at the same time, and which is why the notion of separation church and state comes from. But I always say it's the wrong. We're looking at the wrong problem. the reason why the church had that, because the state had the power of money at the same time. If you would have separated money and state, meaning you would have eliminated the central bank and you would have taken the ability to print money away from the politician, you have two effects that happen immediately. One, the size of the government shrinks by 90%, or maybe more than 90%. I don't know what the exact number is, but by a huge amount. Why? Because now everyone is accountable for whatever they're spending to whatever they're supposed to be serving of the people, basically, right? So because they can't just print it or they can't just make more of it, basically, right? So that's point number one. And then point number two is, if you don't have money, power can't corrupt you. Power can only corrupt you if you have money at the same time. So if I've separated money from you, you're very welcome to run the majority's religious affairs for the majority. You could, whether that's the church, the mosque, or the synagogue, or anything else, basically, that whatever that population has decided to adopt, basically, you're very welcome to govern that, as long as you don't have the power that corrupts you via the money. So the real point that basically sound money does is decentralized sound money does. It separates money and state, and that's what we require. All of the evil that we have, the vast majority of it comes from the notion that money and state is together, right? People always say, okay, what was the US looking for in Afghanistan? Why did we spend 20 trillion over that long decades, basically, in Afghanistan to try to protect from what, basically, right? Would have never been possible if the US wouldn't have had the central bank, wouldn't be the reserve currency, and could print something and then sell it to us and keep this, what's called the seigniorage, right? The printing of the $100 bill costs you 5 cents, but the minute it comes out of the printing machine, it's worth $100. Someone makes that profit. It's the Federal Reserve. I mean, it's the government of the United States that makes, called seigniorage, right? That they're making that profit. So if you can't do that, because you also go and have to dig for gold, or you go have to mine Bitcoin to be able to create to be able to create the Bitcoin, or you have to go and pay the fair price in the market and buy it, then obviously everything changes, right? So the real notion that we as humans need to get to is we need to separate state and money, and once we've done that, everything else is kind of solves itself, basically.
If we now move over to the transition, and we think about the fact that there is, on the assumption that there is no state who in their, well, I won't say in their right mind, but in their current frame of mind, would want to divorce themselves from money, essentially.
From fiat money.
From fiat money. I'm saying, well, yes, exactly. They wouldn't want to.
Basically.
Or just, I'm saying essentially the monetary system, meaning this separation is something that presumably states are going to resist unless they have extremely, low time preference, essentially, right? Unless it's driven by some very, very strong, moral or ethical, basis. And they usually say, with these things that in the competitive kind of game theoretic type sort of world that we live in, if you have got to the top of a country or the top of a corporation, the chances are you're pretty much sociopathic or psychopathic anyway. So the probabilities, right, of this happening top down seem almost negligible, and therefore,
it will have to happen bottom up.
It will have to happen bottom up. How does that happen can that happen really in a way that's peaceful?
I don't know. Obviously, I'm not going to sit here and claim that I know. But if more and more people is what I call opt out, if more and more people say, I'm not going to buy your bonds, I'm not going to invest in your government bonds and finance your government for 5 years, 10 years, 20 years, whatever the long-term bond yields are, like the long end of the bond curve, I'm not going to do that. If I invest for my children, if I invest for my own future, etc., I'm just going to buy sound money. I'm just going to buy stack sats, and I'm going to buy Bitcoin. And Bitcoin only requires energy and electricity, and both energy and electricity will be around, basically, right? And therefore, I basically opt out of your system that you have designed, right? Meaning you as the government, as the fiat proponents, basically. If more and more people do that and say that, then by definition they have to change. It's the same argument of, before Facebook, before Instagram, before this, that, the other, you obviously had a certain system where certain media companies would control the media. They would tell us a narrative, we would listen to it and then believe it because there's nothing else you get told. Now you have turned this around because everybody that has a smartphone has a camera in his hand and has the ability to to stream and explain to you of what is happening on the ground. We've just seen this recently with Gaza, right? I mean, there's a certain narrative that is being tried to be told, and then there is a certain other narrative that you can clearly see from people that are being sharing it live on the ground, basically. So could the people at the top of the media empires or the governments, etc., do anything about it? No. That's how technology goes. That's why I always say God works in mysterious ways, basically, right? At the end of the day, we all have a plan until we get punched in the face, like Mike Tyson says, right? So, but God is the best of planners, basically, right? And if He plans for this to happen, then it will happen. Do I believe that it will happen top down? I doubt it, like you said, because of the incentives that are misaligned for the people at the top. But do I believe that it will happen bottom up? It's already happening, whether you believe it or not. We went from a zero asset in March, in 3rd of January 2009, which was the Genesis block, which was worth zero at the time. The first transaction in 2010, where someone bought some pizza or etc., that was like the known, like real transaction, so to say. But now, fast forward, it's a 2.5 trillion asset. It trades 60. It's the most liquid asset on planet Earth. Already the most liquid asset. It trades 60 to 80 billion dollars a day. Basically, it's more liquid than the biggest companies on the planet. Right? It trades more than Nvidia today, which is double the value of Bitcoin. Nvidia is 4.5 trillion company, and it trades less than Bitcoin, right? So it's already, and it doesn't trade 24/7. Bitcoin does. You can't go with your Nvidia shares and land in Lahore and say, hey, can you exchange that to local rupee, I think it is. People will be like, what are you? What is this? Basically, you can do that with Bitcoin anywhere in the globe, basically, right? So it's already there. It's already being adopted. And fast forward, it's now become the 4th, 5th biggest asset on the planet. Right, it's just above Amazon or just below sometimes, depending on where we are. But I'm convinced that in 5 years from now, it's going to be the most valuable asset together with gold on the planet, basically, right? So if you look at this from that perspective, what we believe will happen from a top down, what should we believe logically should happen from a bottom up perspective is already happening. If this is what happened in 16 years, way more will happen over the next 16 years, because now it's legitimized. Now it's actually okay for you to be in crypto or in Bitcoin. Before that, you were either a crook or a criminal or an idiot, like you said, or a delusionist, basically, right? So things have changed, and things are changing to the better, faster and faster. Think of it like a human. Bitcoin was born on 3rd of January 2009. It's now 16-year-old, is a teenager. Give it another 4 or 5 years when it becomes a real adult and has finished university.
So this is the weird period.
This is the weird period, exactly, right? So after that, the change, I see this with myself on my son, basically, right, of where he is now, right? So I'm extremely positive with regards to its development, with all its ups and downs, right? But it's the journey and the direction is extremely clear to me, which is why it makes me so bullish and so positive about the future of humanity, because I know that once this is adopted from a bottom-up perspective, by definition we have a lower time preference in humans, and by definition we will have a more fairer world that is more equitable. Again, it comes back to all these things. There is no logic in Islam of being a debt-based system, of credit-based system. We didn't go into that, basically, right? But if you look at all of these things, it just makes it a much fairer world, much more equitable world, much more decentralized. We're democratizing cost of capital, Iqbal. It's a fundamental thing. I always say, think of it. The internet came in the very beginning, and we could only visit websites. What did it do? It democratized information, right? You sitting in London had the same access of the kid sitting in Tokyo who was going onto the same website. They would both go to telegraph.com or code.co.uk and they would read the same news. They could do that, right? A bit later of the invention of the internet, now all of a sudden we democratized education, right? I met this kid recently in Dubai. He was 18 years old from Kyrgyzstan. Kyrgyzstan is 20, 30 years behind Turkey in terms of development, right? And it's a Central Asian country. And this guy had an American accent and was speaking to me as if he's from New York. I was completely in shock. The kid was 18 years old. I thought he was at university or had gone to boarding school in the US and now was basically, either entering university or doing something else basically in the US. And he had just told me that he had just arrived yesterday in Dubai because his cousin had moved to Dubai, and he had never left Kyrgyzstan up until now. In fact, he just had received his passport less than 10 days ago, basically, right? From when I met him. And when I asked him, how did you learn all of that? He said it was on YouTube. It was YouTube that he watched the movies, he learned the language, and he always tried to mimic the accent, and that's why he ended up with an American accent, basically, of learning English, right? So completely self-taught. So the internet has first democratized information, then it has democratized education. Now you can have an MIT degree, a Harvard degree, like you, an Oxbridge degree, being basically purely online to anybody, democratized it to anybody on the globe that is willing to learn, right? And the next step is we're democratizing cost of capital. We're democratizing the ability for someone to have the same chances of success, whether you're born in Nairobi or whether you're born in San Francisco. That's a huge thing. That's a fundamental shift in society that will cause. That's the reason where a lot of people will stop having all these terrorist attacks, etc. Right? It's the guy that is in Sudan, in Egypt, in Afghanistan, in wherever, basically, that is watching on Instagram the wedding in Paris, the wedding in Cannes, the wedding in whatever, and says, why is it they have this life and I will never be able to have this life? So then he makes up his own things of why the reasons are for that. And then basically he goes, and if he's off astray, he will then go and do something violent for the reasons that he thinks it can't be his fault, because no human ever thinks it's their own fault, basically, right? So all of this stuff, if you have democratized cost of capital, arguably you have a much better world, basically, right? So it makes me extremely positive, and I think we're on the road to be there. But I think from us, and I care about my people first and foremost, right? I basically say we need to opt out faster because we are still early in the S curve, in the adoption curve. And if we adopt faster, which is why I'm involved in multiple charities and other activities that are related to the adoption of Bitcoin as a sound money system, right? As sound monetary system. If we are earlier in doing that, we will be just winners. It's like us digging for gold while it's still easily available until we have to go down the pit that is underground mining and it becomes more costly and more expensive to find the gold, basically, right? If you were early, you will have made more money, so to say, right? And therefore you'll be better off, basically, right? And that's what I would encourage people and tell people to do.
What is the next big milestone, and when do we get to this point where people are actually transacting in it, on this in a much more regular basis? And to what extent does that also then require the stability? Because obviously Bitcoin is very, it's volatile. I mean, at the time of recording, there was recently just quite a big sell-off as well.
Yeah.
So can you just talk about what these next big milestones are and what needs to happen to have this combination of both stability as well as a possibility of people, actually just transacting in Bitcoin from end to end, essentially?
Yeah. So I think in the beginning now, for people to transact in Bitcoin for the daily goods, etc., that's not necessary because we're still establishing it as a monetary base, basically, right? But to answer your question of saying what I think is the next big milestone, I think is the notion of Bitcoin. It's now being established as digital gold. Everyone on CNBC, in Wall Street and everywhere else, we have 100 billion in ETFs wrapped in Bitcoin, etc. now. So it's widely available, easily purchasable, accessible to pretty much anybody, almost anybody on the globe, basically, right? So the next step in my mind is for it to be adopted by the central banks, because that's what we don't have yet. Right now, the largest buyers of gold are the central banks. It's not the individuals. The largest owners of gold are the central banks. Why? Because when push comes to shove, the central bank wants to show that if their own currency is volatile, etc., to tell investors, no, guys, relax. I have X amount of tons of gold. This is the backbone of my society, of my economy, of my system. And for people to say, okay, they sit on 200 billion of gold, so they're not going to be able to not pay their liabilities tomorrow. Let's all chill out, right? That's the...
Well, why haven't they done that thus far?
They haven't done that thus far because Bitcoin is still a teenager, right? So once Bitcoin becomes an adult, which is why I think the game theory, and arguably it looks like today that the US will be, the first one to adopt that. And once they have done that, then everybody will run with it, basically, right? Because then it will be kosher to do so, basically, right? Right now, it's only the smaller countries that have still tipped dipped their toes in it, like El Salvador, Bhutan, and some other countries, etc. That have already either Luxembourg just started with a sovereign wealth fund to acquire 1% of their sovereign wealth fund in Bitcoin, etc. So, but that's in my mind the next game theory, the next milestone of basically countries and central banks to say, this is clearly here to stay. This is digital gold. It does travel well over time and space. I need to have this as a protection mechanism in my governmental coffers, basically. And therefore they will acquire Bitcoin. And when that starts, it could really start the new level of it's like the final boss from a Mario game perspective, basically, right? Because after the central banks, then there is no one else. There is no other larger buyer. The central banks are the largest final buyers of any asset on the planet, basically, right? I mean, they're larger than the hedge funds, than the institutional investors, than anybody else, the sovereigns, etc. It's the central banks, right? Why? Because they can print money and purchase.
How does this link? How would that development then link into that separation of money from state, though? I mean, at that point, once that takes place.
So the argument would be, think of it a bit like the Trojan horse, that you let the horse into the how do you call it? The walls of the city, and then the soldiers come out of the horse, and you've lost the battle, so to say, right? And you took it in because it looked like a shiny horse and it looked like a nice statue, and then all of a sudden it actually works against you. This is exactly how I define this situation as well. They will want to adopt it because of all the characteristics that Bitcoin has, that it makes it money. Right, that the fact that is like we all disguise, right? The confiscation aspect, the limitation aspect, the travelability aspect, the divisibility aspect. It is money. It makes it money. So they will want to have that. But once they've adopted it, basically, because of that bottom-up evolution, people will realize, well, why do I need you? Like, do I need you? And that's then obviously, because again, what is democracy, or what is the form of government that you have? It's whatever the people's decision in the collective form is, basically, right? If collectively then people come up with the idea to say, hey, wait a minute, but now we don't need you anymore. Like if an AI would do the podcast as well as you do, which I doubt will ever happen, Iqbal, by the way. So
sure it would.
Then that's the same argument, basically. That's how I think it will end up happening.
Okay.
But that's just my theory right now. I mean, alimul ghaibi illallah, right? So
Sure. Okay. Are there anything else you want to say in terms of the transition, the difficulties of that, or?
There is a scenario. I mean, let's be very clear and honest and open. There is a scenario that before we get there, right? Because the biggest loser of that all is the US dollar, because that's the reserve currency of the globe, right? That's the one that has the highest seigniorage, that has the highest profit from printing money and selling it to the world, basically. There is an argument that, like you said, that battle won't be gone without a fight, basically, right? And right now, it's very clear that we're entering a multipolar world, right? Meaning the US, but there is another power now that is at equals or close by to the US, basically. So there is an argument to be made that it's not necessarily going to happen in such a smooth,
Of course, yeah.
I hope it to be smooth, but there is an argument to be made that it could also be that the change could be happening quite violently, that there will be war, and then all of a sudden people then will realize that, but what was the outcome? And now this doesn't work anymore. The system doesn't work anymore. Capitalism has failed me, basically, right? I had written an article a long time ago about that. And if that happens, then I think it would accelerate the adoption of a sound monetary system, of us going back to a sound monetary system. But at the same time, it would not mean that it would be happening in a smooth manner, right? There would be significant disruption, basically, in that process, basically.
On a really practical note, someone who might have been got this far and says, okay, well, I don't maybe get all of it, and I don't know what's going to happen, but I know I need to have some of this, and I haven't had any of it so far. Does it make a difference how they go about acquiring it, essentially? Meaning, there are various companies out there through which you can open wallets, you can get stuff, and different coins and what have you. Or there's the sort of the direct approach, where you have it in sort of hard terms. Does that make any difference, basically? Or people getting ETFs, but maybe that's just to ride the sort of speculative effect of it. I mean, does it matter how people go about and acquire it if they want to?
Yeah, so it makes a difference in a sense of Are you acquiring something as an IOU, or are you acquiring something as a bearer asset that is owned by yourself, that nobody can take away from you, right? If you own the private keys, we say not your keys, not your coins, then anything else you don't own. Technically, you don't own. Your ETFs are owned by the brokerage and the custodian, and as long as the brokerage and the custodian is there, you have it. But if the custodian and or the broker disappears, you need to go to the custodian. If he then also says, who are you? Then your ETFs are gone, right? So in Ukraine, we saw that very clearly when people had to run away from their home and start a new life because of a situation of a war. The only way for them to do that was not gold. The only way was not their brokerage or their real estate accounts, their real estate assets. It was their digital assets, right? Their ability to have their Bitcoin in their wallets and then start a new life elsewhere, right? So for those that I would call gold bugs or real asset bugs, I would recommend for them to have their Bitcoin on cold storage and own the private keys themselves and protect those private keys very carefully. For those that basically saying, look, I've got it, I just want to opt out basically of the system. Now, you're not really opting out by buying the ETF. You're still supporting the fiat system because BlackRock is still making money on the back of you, or whoever service provider you're using, basically, right? So I would say, given we don't know, the direction is very clear. We will go into a sound monetary system, in my mind. It's very clear. And as I said, I believe I will see it in my lifetime. So, because that direction is very clear, and because it might be with disruption, and because your investment horizon is not 1 year, 2 years, 3 years, but actually 30 years, 20 years, like you would buy property, basically, right? You don't buy property for a 2-year period, basically.
Some
right?
people do.
Some people do, but
Sure.
and a lot
I
of them
understand.
fail in doing that, basically, right? Successfully. So that's why I would say do it the right way, like get it off on cold storage, own the private keys, keep the keys, and therefore it's your coins because it's your keys, basically. That's what would be my recommendation.
Sure. And just one final question, just briefly, which is that obviously there are a lot of, are there any connections in your mind between, in any sense, between all of the exponential AI developments that are going on, the benefits of those, the serious existential risks posed by those, and all of this stuff going on? So what can you just describe, what is that link?
Yes, there are two things that I will elaborate very briefly, and I'm sure there's more if you think about it, but there's two things that I will elaborate. One of them is Satoshi designed Bitcoin in a way that you need what's called proof of work. So you have the miners, which are huge, now become huge data centers, that are trying to solve an algorithm to then find the right combination of numbers, and that then allows the protocol to issue the Bitcoin to them, basically, right? So that happens with computing power, right? Why? You have to think of Bitcoin as being packaged energy. What is gold? Gold is packaged energy, and it has anti-fragile characteristics. It stays over time against the law of entropy, but it's energy. It's just condensed energy, right? And Bitcoin is condensed energy as well, because it requires, for you to rebuild another Bitcoin, you require huge amount of energy to do a mathematical equation to then package it into a Bitcoin that the protocol issues to you. So it's no different than gold, basically. It's just packaged energy. Because it's digital, it just travels better over space, basically, right? So if you think of it this way, then what we are now in the AI world is everybody has now realized that you need computational power, meaning the one that has more energy is the more powerful, right? Because we're now looking for intelligence as packaged energy, which is a whole new podcast that you need to do with someone else that is way above my pay grade, of basically what is life, right? Life being frequency and energy. And, EMC square of Einstein saying that, you can't create or lose energy, you can just change its form, so to say, right? And why is it that we are at a frequency, but we are alive and we are instead of dead? So this is, it goes into a whole different area of, you will require people with way more expertise to go. But if you think of it from that perspective, Satoshi saw, so to say, that that compute will be the form of how do you call it, like power, right? If the one has more compute will have more intelligence, and therefore it will be very easy for people to link compute with money or with value, right? So people will then say, wait. If Bitcoin is backed by this much compute, it must be so valuable, basically, right? Which is something still for us more difficult to get, but our kids will be much more easier that will be born into this world. It will be much easier for them to understand that. That's point number one. The other aspect that I think is very interesting is that AI has also led to all the fakeness that has happened in the world, right? Fake videos, fake voices, fake writings, fake articles, fake of fake square, basically, right? Of you don't even know, like you see a video, you call me and you say something on a voice note. I don't even know if it's the Iqbal that I know or someone is making a prank on me, basically. So the only way for you to establish truth will be by stamping something on the Bitcoin, basically on a true ledger, where everyone has approved that this has happened, right? So that's another aspect that I think marries beautifully in this new AI-driven world with what Satoshi was trying to achieve, which what I call that 10-minute finality, right? Every 10 minutes on the blockchain, you have the finality, you have the ultimate truth that happens. You know exactly who owns what, and you know exactly who doesn't own what, basically, or who owned what before 10 minutes ago, basically, right? For the whole world, on the whole, in one picture, basically, right? So that's something I think that from opposing and getting against all the frauds or mistakes or fakeness, etc., of this world, to stand against that, I think that's also a very, very powerful tool, which is, done by blockchain, basically.
Fine. Two quick things. Personal question, actually, which is that, in the last year or so, I've when I've thought about like just my own life and what I'm up to and how I can have the most impact, it's become clearer to me over time that this area is something which is, as we have hopefully, and you have well sort of explained throughout this conversation, that is just so fundamental to, how everything happens or can happen or will happen, that actually I thought to myself, well, maybe I should just sort of go, full-time evangelism on this particular point in such a way that actually, well, yeah, obviously it links very much, to our faith perspective and everything else. And I've always been a believer in the sort of the one thing, like do the one thing that has the most impact and, makes, and just, renders more other things kind of obsolete, essentially, rather than being split, in one's mind between all sorts of different projects. And I remember maybe some time ago, you and I had this kind of conversation briefly, just in terms of your own kind of direction and stuff, right? In terms of focusing on what. So is that something that you think I should do?
I very much think that someone of your caliber and your background and your depth of thinking should very much be doing that, because I believe that this is the most important aspect that pertains to mankind today. I mean, the reason why we've started EverGive, I'm the founder and president of EverGive. Right now, I'm part-time on it. Ismail, that you also know, our common friend, he's the CEO.
Yeah, well, I'm going to be speaking to him soon. So
okay,
yeah, we don't.
So on EverGive, this is the reason why we've started that, because we believe that after having raised $140 million for charities over the last 7-8 years on these various ventures that we had, we basically realized, where did we move the needle? Where was it that we've actually accentuated real change, basically, where we can see, apart from a few schools and a few smaller hospitals, basically, that have been developed by it, most of the money in the fiat world basically evaporated, right? So now, not saying it had no impact, I'm sure it had some impact and it's done good for humans, but in terms of lasting change, instead of moving the needle, basically, right? Like everybody wants to have, like the new generation now, I want to do something impactful, right? So I think you are one of the few people that are extremely well positioned to go down this, because it's a global message and it's a human message, and it's so much in line with our faith, because our faith doesn't make a difference. Doesn't make a difference because if Allah has made the human valuable, they are valuable to all of us, basically, right? And that's, I think, is the fundamental thing that we need to think about, because it's almost like you only have Muslims and potential Muslims, basically, so to say, right? Meaning you only have believers and potential believers, right? Because we don't know who is at which rank in which situation. The only thing we know is that we're probably not the best ourselves, basically, right? And that's how we have to think of this. And if we can do something that can move the needle by where we know where the direction is going and where we know what type of world we want to have, and if we can do our small part to accelerate that, given we know it's so much in line with our understanding of the pillars of zakat. Like I always say, the most low time preference act a non-believer can do is to have children. And by the way, if you're a atheist, capitalist, whatever you name it, basically, it makes no sense whatsoever to have children.
It's true.
Why would you have children? They're noisy, they're painful, you can't sleep, and if you're lucky, they might pay you back after you've spent, especially in a country like this, $1 million on their education. You know, they might pay you back if you're lucky. Probably not, basically, right? Most haven't, basically, right? You know, so it makes no sense. I'm just being, now a bit harsh, obviously, but obviously still it's a low time preference act to have children. But as believers, we pray 5 times a day with no expectation whatsoever and no benefit whatsoever in this world. We do it because we believe we are asked to do it and we believe we need it for the hereafter, basically. It's an even more low time preference act that you do regularly every day. We fast 1 month a year for a low time preference act, basically, right? So if you do all of that, then establishing low time preference money basically should be our most important dawah or whatever you call it
project
because clearly this is what the Almighty would want humans to live in, because everything the message he's brought across for all the prophets that have come, etc., the only thing they've been shouting out of the treetops has been to be a low time preference person, right? And therefore, I believe people, especially in your position, I think you guys would be doing a 10 times better job than anyone else that I know. I had this recent conversation. I won't name the name, but I had this recent conversation with another brother who is quite well known on the Islamic banking and finance side, where I told him exactly the same. I said, someone like you with your following and your understanding and your stigma and you could have such a big impact. Like you should be dropping anything else you do and you should just focus on this, basically, right? Because it's our most important problem that we need to solve. The faster we solve it, the less suffering there will be, the better humans will be off, all of them.
Well, you've done an amazing job of explaining all of this and advocating for it. Thank you for bringing it to everyone's realization. I hope that this becomes a popular episode, that it continues to facilitate conversation, discussion, understanding. It takes a while. I mean, for lots of things in life, right? It takes a while for people to first to realize something, then realize something exists, then to demonstrate the interest, have the interest, explore it sufficiently. There's obviously all these complications and stuff, and there's lots of things that you will have said that people will need to go and search and figure out, what was even being said in the first place. But it's unlike many rabbit holes, perhaps this one is that you might actually get a rabbit off the back of it. So no, thank you so much. It's been a pleasure, and I'm grateful for our friendship, and excited about what the future will bring. So
thank you,
Iqbal.
So much. I am the one that has to thank you. I really mean this from the bottom of my heart. You've been an inspiration to me for the period that I've known you since 2011, which already, by the way, has been 14 years now.
Yeah, crazy.
So It's crazy that we know each other for so long. But I think with everything you've done for the people, whether it's in the UK and outside the UK, I really want to thank you and for having me here as well, for thinking that my thoughts would be valuable enough for you to be on your show. That's a real honor for me to be here. Jazakallah.
Awesome. Thank you so much. Until next time, take care.
Thank you so much.